right, so welcome to Game Plan Sunday. Today is January 24, 2021. And the markets last week, we had a pretty interesting week. So to kick off the week, we had a short week because of the holiday, Dr. Martin Luther King Jr.'s birthday. And so we kicked off the markets with the inauguration also. So I was a little, on edge about how that was going to turn out on Wednesday. Nobody knew how it was going to turn out, obviously. But in my mind, I kind of figured that it was going to be a non-event, because they normally kind of just, blow things all out of proportion, right? It's normally when things are going normal, when you get things that just pop up on you that you didn't expect, but, I didn't know that was going to happen. But when they already preparing for, this catastrophe, I kind of, had to take the opposite, point of view that it was going to be a non-event. And lo and behold, it was a non-event, right? You have all these, military personnel. You had a lot of Trump supporters still holding on, thinking he's going to pull some kind of last minute movement. And that never materialized. He left out peacefully. He did his speech thing and everything. He flew out on the chopper that morning. So then, you had Biden's situation came through, and everything was just cool, copacetic. And so it was a non-event for the markets. But the markets was, up because, the markets didn't want any risk. You guys remember when Trump came into office, that's when we started getting all this volatility, because Trump is like the volatility king. Now, what's going to move the markets with Trump gone, that's going to be very interesting to see how this play out. But I think that we have to actually, put in perspective, the markets haven't priced in Biden's policies. I think some things got flipped on the market's head where they was thinking the Republicans were going to hold on to the Senate. And that did not work out. Okay. It was like, okay, Biden, he ain't going to be able to get too crazy out there with his policies because the Republicans are going to keep him in check. But the Dems, they pulled a whole sweep, so when they pulled a whole sweep on them, that makes things even more interesting because now the ball is in the court and they could do a lot more than what the markets was probably anticipating. And so I don't see the markets actually even pricing that in. I don't even know if they're even factoring that in, what Joe Biden's policies are going to be and how they're going to impact these corporations. And it's just interesting because now we have the markets that are very, very irrational and they're moving only on stimulus only. They're not even moving on fundamentals. That's all I was telling Jonathan when we was in the chat this week. For you guys that don't know, our chat room live on the website, obviously you see the little bubble down here. You just click that bubble down there, you're in the chat room, right? So we was talking about, fundamentals, growth stocks, fundamental stocks and stuff like that. Talking about, valuations. And, my point was that you could throw valuations out the door because the markets are they're not rational. Nobody's being rational. We had GameStop, right? We talked about GameStop. And in fact, the last Game Plan Sunday video, I talked about GameStop. And then this past week, GameStop just went so crazy. It popped up so crazy. They had a halt trading on it, right? It's GameStop, right? I'm a gamer. Like I played the video game this past week. I played Call of Duty, Black Ops, Cold War, Zombies. Play a little bit of Zombies, right? I'm a gamer and I haven't bought a CD or disc in over 5 years, right? I've been digital ever since they've been able to have digital gaming. And you figure that everybody else is going, digital anyway, especially, you have kids and they scratch up the CDs and all of that, it's terrible. You just download your game or whatever. And then you visiting friends and family. You don't even have to bring the console. If they got one, you can actually just, upload your profile on their console and you get all the games and stuff like that. So it's always a thing that just made sense to me. But what's never made sense to me was GameStop, with the phasing out of, physical discs. Again, GameStop is like a pawn shop for gamers. People go and they sell their games and people can buy used games and stuff like that for cheaper than the retail, or they could buy old consoles, cheaper than the retail and stuff like that. And so maybe, because perhaps, I don't know, really know what they're doing, but their fundamentals has been, basically shit for years. And I see that it should continue to be shit. Who's going to GameStop buying games, right? That trend should be phasing out. It's kind of like going from Blockbuster to Netflix, right? Who goes to Blockbuster anymore, right? The writing is on the wall, right? Blockbuster's out of business. First it was Hollywood Video, then it's Blockbuster, right? And Netflix is, that's what everybody does. So that's where gaming is going, point blank period. But I think that the video game industry basically kind of gave some concessions to GameStop so that they can kind of not take them out all at once and kind of give them some time to phase themselves out or to re-innovate themselves. But, the GameStop situation, I don't know if you guys saw the stock. Let me actually just go there real quick. Let me just show you guys the irrationality of the markets and just crazy stuff happening right now. GME, GameStop, right? So this popped up on the radar in the chat room. One of you guys was calling out not last week, but the week prior when we got this move. All right, so we got bingo, GameStop popped up. It's like, okay, cool. Then it starts to melt up a little bit, and then bingo, Friday you get this astronomical print, $76. So you going from, this is about $20, somewhere about $20, all the way to $76 in a week. I mean, that's crazy for a stock that doesn't make any money, for a company that's not making any money. What is going on here? I was talking to Terrence and he was saying, what's going on with the markets, man? I was like, you ever heard of a melt up? He's like, nah. I mean, well, that's what's happening. The markets are melting up. So you have meltdowns and then melt ups. This normally happens, with, before crashes happen, like the .com bubbles and stuff like that. You see everybody just putting in, just going crazy. Now, it really kind of makes sense out of a lot of this stuff, though, for you guys to understand. Just in case you were wondering what's happening with the markets, when you have government intervention, you have the central banks, you have the Feds. When they come in and intervene in the markets, and they do, this MMT stuff, this yield curve manipulation, it causes behaviors to change. It causes the investors in the game to change how they would normally maneuver. Otherwise, the central banks was not involved. They would have behaved on the, normally where you have your value investors, valuating stocks and stuff like that. But now who cares about fundamentals, right? The Feds is in the game printing money. And they're suppressing interest rates. So smart money, I see a lot of stock trading groups out there. They don't even teach people about the bond markets. That's why I like on Wallstreet Jackboyz, I like the time in the markets class was so good. I had to keep that class for you guys because the time in the markets class teach you guys, about the bond market. So if you go up here to the courses, the Trader Master class, and then you got the time in the markets class, that's a free bonus class to help you to understand, the bond market and stuff like that, right? Interest rates, inflation, all the economic terms that you hear, but you probably don't know about. Well, I'll teach you that here, right? So you can understand this and make sense out of it. But when the Feds come in, and they start to suppress these interest rates, it causes distortions. It causes investors to maneuver in ways that they wouldn't, operate otherwise, right? So the safest bet in town is bonds. Safest bet in town is bonds. So when the bond market is being manipulated to the fact that there's no interest rates, there's no interest. That means you can't make no money off of that. The smart money has to move other places. And so in times they would like to put on safety, they can't. They're kind of forced to put on risk. So you have all this money that's moving in the markets, picking up risk in times that's like, an overbought stock market. And stock market is extremely overbought. Okay. Now, nobody knows when this new bubble is going to pop, but it's extremely overvalued already. And there's a lot of big, economic whizzes out there calling for a new crash, a double dip recession for 2021. I could definitely see that happening, but who knows, right? So that's something that we have yet to see. We were able to time this whole situation when we had the yield curve was, somewhat normal, but now the yields is all the way down to zero. So it's like, whatever, they talking about going negative possibly. But we just know, we don't know, but we know that the Feds, their commitment is they're saying that they're not going to raise interest rates. And if they raise interest rates, that would tear this whole market to pieces. And so, there, lots of people that's analyzing this situation say, hey, the Feds are going to be forced to raise interest rates. It's not even going to be a choice. But again, I don't know, because we're dealing with human action, human behavior. Humans are irrational, and we're seeing a lot of irrational things happening in the markets. So anyway, I just want to talk about that for a second, kick it off with the GameStop pop off. Here's an economist here. Inflation turning the tides is on the website. So if you guys want to check that out, you can go to the website right on the news feed, right? You see this highlighted right over here on the news feed. And you can check this article out here. So my question is, inflation will show up, but what will central planners' course of action be to deal with it, right? The question is, will they raise, the interest rates to deal with it? Okay. So that was an economic article. Oh, this one here, the IMF, International Monetary Fund. They think we can, this is what I put in here. They think that we can spend our way out of this recession with asinine debt levels and record unemployment rates. But governments feel like they had to do something. So they feel like they had to do something. They feel they need to intervene at any cost. Because it's like, well, we got to do something. But when they do stuff, it has some kind of impact. They can't just intervene without an impact. Now, the question is, are the impactful things going to happen short term, mid-term, or long term? Those are things that we have to see play out in the market. A lot of times that what they try to do is try to forego things or try to defer things so that they happen, later in life, and we can get benefits today and we'll pay the cost and deal with it down the road. So it's kicking the can down the road, basically. That's what they hope to do. It's a lot of manipulation in the markets that they do to make this happen. So what we had the new Treasury, which is the old, Janet Yellen. She's the old head of the Federal Reserve, the dove of all doves, right? Yellen. She popped in. So Biden got a dream team. Basically, his dream team is the old team, the Obama team. So that makes the markets feel relaxed. It makes the markets feel comfortable that they have players that they already familiar with, right? So, I think that was smart on his end. I was seeing him was talking about, I guess a position that people wanted him to give Bernie, and he couldn't do it. He was like, nah, I can't do it. He's like, Bernie understood. I think they paid Bernie, y'all. Bernie, y'all saw him sitting with the mittens. You know what I'm saying? People, the memes popping all over the place with the mittens. He cool. He's sitting on a couple millions. They done paid the man off. You know what I mean? So, Bernie done got paid off, but he had to put in, dream team so to keep the markets, feeling like things are going to be normal from what they, experienced under Obama, And so Yellen, she's one of the old players that's back, with a new position, at head of the Treasury. And so, we had her, she took her thing and she gave a speech. We had that happening this week also. And I think we got some things on the news feed. So we'll just scroll up and see if I can find that in here. I know it's up here somewhere. But yeah, make sure you check the news feed daily because there's always some juice right here on the news feed. I know y'all be plugged into the Facebook and all that, but that's a lot of garbage on that. So we try to keep the value right here. All right, so further education. This right here is a post about inflation. Inflation breeds even more inflation. Thorsten Polik, this is from the Mises Institute. So if you guys wanted to learn a little more about that, like that's posted right there on the website. Of course, Game Plan Sunday from the past week. This is the hearing from Janet Yellen. I was just telling you guys about when it was live. If you wanted to see it, the link is right here on the website. You could check out things that she was talking about. And it's interesting. She was talking about being tough on China. Also talking about, you guys know that when Trump came in, he straight up, you got to understand the problem with Trump is that he had no compromise. The good thing for the central planners, I should say, with Biden is that Biden is willing to compromise. So the problem that they had is that there was no compromise with Trump. But Biden, he's going to compromise. He's going to make some kind of compromise. And Trump, he just stayed on his principles. He wasn't moving from that. But Biden, when it comes to dealing with China, he says he's going to take a tough stance. And that's interesting because I think that people was thinking that it was going to be lighter. He's still going to be tough, but I think it's going to be tough in news articles only. Like you have a good, tough story, you know what I mean? But in reality, the policies and stuff like that, we got to see, right? The main thing that it looks like the Democrats are pushing for is, about, humane conditions and, the way they treating the Muslims over there. And so versus, economic things. And so maybe if they can get, China to, calm down with dealing with the Muslims, then he'll forego all the rest of the stuff and say, oh, we compromise. We'll see, though. Nobody knows. He just started. So we got to see. So anyway, I'd love to hear what you guys have to think, have to say on that, Justin posted in the chat room about Kathy Wood. Okay. Kathy Wood, I just put her into the Legends and Gurus group, right? Because Justin talked about her. She's, running the portfolio of ARK Investments. So as Legends and Gurus. There's groups right here. You guys see the Gurus, Legends and Gurus group. If you want to check out her profile, which is right here, you can check it out. Her portfolio, how she's running it. Again, you can actually see that and possibly, get you some ideas for your own portfolio, by seeing how the big dogs who got all the data and information, how they're moving, right? Maybe you can learn something from that. All right. So that's more information here that we had about Yellen. Okay, we had Yellen, we had Biden with his inauguration and stuff like that. Everything was cool, copacetic on that. Netflix earnings popped the week off Tuesday after the bell. Netflix pop was crazy. It was nice. And that was a good sign for the markets. They had a lot more subscribers. And so things turned out pretty good for Netflix. And I expect things to continue with a lockdown economy. So you got people that's trapped in trapped in your homes. You can't go to the theaters. AMC is suffering crazy. The theater that I normally go to, I have subscription to Regal Theater. My wife, she likes watching movies, so that's something that we just do. They've been shut down for a while, so I can't get the nice movie theater buttery popcorn that they have at the special theater that we go to, because they have a special flavor to that popcorn. So what we do, last time I was there, the day that they closed the theaters down was the day before the last day. I watched the movie Tenet before they shut down, but I like to go there and I get their popcorn salt, right? So I go, let me get their popcorn salt, and they always, they give me like a whole cup of the popcorn salt so I can make some at the house, and I could try to mimic, the flavors that they use from the movie theater. It's not quite the same, but at the same time, we stay at the house, we watch movies. I watch them on Xbox or what have you. Amazon got movies. Something that is really interesting that I really think that's cool is that how these companies were so smart. These video content companies are so smart to stop depending on Hollywood to make them films. That, with the extra money that they make in the markets, right? They took that and invested into making their own movies. I mean, that is probably like the most genius play of the decade, if you ask me. Better than, Tesla and all this other stuff. Like what they did, make their own movies, right? That move was so smart. You could take these guys, these old washed up actors, whoever. I mean, you could pay them a fraction of what Hollywood would pay them anyway and get them to do your stuff. Or you get some top notch actors too, especially if they going on a decline, and pay them to do your movies or whatever, your writers. It's a world full of talent out there that can write and can act, people that you never even seen or heard or wouldn't even give them a chance. But these guys, like Netflix, so they're doing. So you got the Netflix originals, right? They do their own movies and they're making the money. It was just a genius move. You got Amazon with their video content, and they have Amazon Prime exclusive movies. HBO now, the way that they're launching movies that they would normally launch in the movie theaters, you have to have their app, So I like, how these companies are changing with technology, the lockdowns and blah, blah, blah. Excuse me, but they were already moving into that direction anyway. So it's a smart move on them. All right. Here's another article here. This is lockdowns caused by China's new COVID-19 outbreak are sparking concerns over steel iron ore. This is a raw good. All right. So if China, who has all this steel, which is China's the world's top steel producer, and analysts say they contribute over 20% of the country's total output. But if they get locked down, then obviously people can't get this good. So if you guys remember in the past, Game Plan Sundays, we was looking at the ISM numbers and all of that. We can see from the CEOs of these companies that they're having supply chain issues with getting things from China. This is not a good thing here, obviously. So you may want to take a look at steel and see how they're performing. But that's the article that's posted in here. Forex dollar slips as U.S. stimulus hopes lift the move. So dollar, starts to fall. 50 years of gaming history by revenue stream. If you're interested, we talked earlier about the video game industry. This is the article that's on, about that in here. So check that out. With, the lockdown situation again, kids at home more than they normally would be if we had an open up economy. So kids are playing, video games. They normally would be playing basketball or football outside. Now they're trapped in the house on lockdown with a mask on their face, playing video games. And, the video game company Roblox, going public is crazy. big move. We got a lot of money that's, looking at Roblox. And the game to me is just weird. My kids actually love the game. As a gamer myself, I like for things to be futuristic, but this game looks like the Mario Brothers in 3D, kind of, probably worse, to be honest. But anyway, they play it, right? It's weird, but they do. So anyway, that's something to keep your eyes open for as well, because I think they have like a $30 billion evaluation, which is crazy to me. Anyway, how Democrats could end Wall Street's infatuation with Facebook, Amazon, and Google. And let's see. Yeah, this article here again, the Democrats, with big tech and stuff like that. I mean, these big tech companies, these guys who run these companies are Democrats themselves. So, I mean, to me, they don't really mean nothing to me, right? I'll talk a little bit about that later here. This is a situation. This article here is about Jay-Z and the cannabis company. You can check that link out. A special feature in the Legends and Gurus group was Jay-Z. Put him in here so you guys can check out his Legends and Gurus profile. I might do one on Master P, to be honest. I know you guys seen a lot of information with Master P coming out. Master P is a very interesting entrepreneur. Been studying the guy for years from my days back in the music industry. And I modeled his ways, even when I was in the music industry, selling records and stuff like that. And Master P, in the 90s, I believe he was like the richest black man in America at one time, worth over 500 million in the 90s, which is equivalent to like over $1 billion today. But he's always invested money. He's always invested money. But business is hard. So I think that I see a lot of people post stuff like, yay. But if Master P if you sit down and talk to him, he'll tell you how many failures that he has to take, because that's what entrepreneurs do. You got to have capital, and then you have to try. And there's no telling what's going to work. Some things will work. Some things won't work, right? And so a lot of these successful guys, they go through losses after losses. So these are stories that people need to hear. If you want to be in business, you need to know the truth. Forget all the lights, camera, action, what they post on Instagram. They only post headlines and highlights, right? But the truth is that when these guys are investing, they're taking risk with capital, whether it's theirs or other people's capital, and they're trying to, deliver value to the marketplace, but people got to take on to it. And if people don't take on to it, then it will fail. And that's a part of the normal cycle. So, but what happens is that as for the entrepreneur, obviously you'd be upset, but what you learn is what not to do the next time. You pick up skills and things along the way. Right. Master P, he has so many different investments. I really like the guy. He's probably one of the best investors that come out the hip hop industry. So he's definitely worth paying attention to. But the guy got ramen noodles and stuff. I heard about the deal about Reebok. And then he's supposed to be launching into this, electrical vehicle situation, which is interesting because, we talked about Tesla earlier, but there's a lot of companies that's stepping into this space. Master P is trying to get in, at the genesis of this thing, because just like anything else, competition is what drives prices down. You need competition. And so, that competition forces Tesla to drop their prices down in their cars. If Master P or Neo or whoever out there has an electric car company that can actually get the prices down lower than Tesla's, but deliver even more value than Tesla, then maybe people will switch over to it. But these entrepreneurs, they have no idea if their, ideas are going to work or not, right? And so that's the risk, right? And the reward is if, the public, the people, the free markets, choose you by spending money with you. So the only way that these people can win is by you spending money with them. If you don't spend money, they will not win. If you don't, just like Wallstreet Jackboyz, if you don't like the videos, you don't share the videos, and Wallstreet Jackboyz just ain't gonna get popping. This is the way it's gotta be. So it's up for the free markets to decide, right? But the entrepreneur gets signals of what to do, what not to do based off of how people are reacting. And so, but anyway, that space, the EV space, a lot of people stepping into there. And because of technology, it really makes things, the barrier of entry, that much easy for people to step in and take your lunch. Anybody can make a website like I have, with Wallstreet Jackboyz, because it's on the web. Anybody can, replicate this. So anybody can make an electric vehicle, using computers and stuff like that. And so that's another reason why, we talk about Tesla being, overvalued. you know, and a lot of competition is stepping into that space. But I definitely wish Master P a lot of luck, you know, with his endeavors. But maybe I'll, you know, take a look into his portfolio and maybe add him as a guest feature in our Legends and Gurus group right here on the website too. Y'all let me know who y'all want to place in the Legends and Gurus group, and we'll run a profile and show their portfolio and stuff like that, so you can take a look and get you some ideas too. So anyway, Belk top lenders, including KKR, looking to avoid taking department store through bankruptcy. Belk going through bankruptcy? Crazy. I used to work at the headquarters, the brothers who actually own this place. I used to actually go to their office. The office was like one of the best offices I've ever seen in my life. The libraries are crazy. This guy's got a lot of law books, lawyer stuff. But the headquarters is pretty nice down in South Carolina. First movers, Bitcoin flips bears. Okay, so yeah, Bitcoin flipping. Bitcoin is interesting because I told you guys a couple of weeks ago I was invited to this, you know, this investor thing with Grayscale and Bitcoin and Barron's. And so what was interesting is that, you know, they are, you know, really pumping Bitcoin up for the financial markets. Let's actually pull up Bitcoin real quick and show you guys. All right. So this is the Bitcoin futures right here. You can see that /BTC. And let me actually stretch it a little bit here. All right. So you guys can see the price of Bitcoin. It started trading under the 9-moving average right here and started slipping, and it's slipping further under the 20-moving average right here, right? So then that becomes a bearish signal where it can come down some. And even in the stochastics, we have, you know, the trend starting to shift down. We have momentum shifting down, trend shifting down. So this is a bearish, move into Bitcoin as of right now. But Bitcoin is like the wild, wild west. If you ever traded Bitcoin, it will make you seasick. It's not like how we trade with equities and stuff like that. I mean, this stuff is trading 24 hours. You know, today is down. Tomorrow, this thing could be up here, you know, by the time you wake up in the morning. So definitely, if you trade in Bitcoin, you got to be very, very cautious, and you can't be a seasick type person looking at this stuff. But anyway, I was invited to this conference thing that they had, and they're trying to get investors to, you know, shift their portfolio holdings into Bitcoin based off of the hypothesis of the dollar collapsing, basically, right? I mean, and that's basically what they're talking about. I'll show you Grayscale is GBTC. So this is, you know, the company who's, you know, doing all this Bitcoin stuff in our side here. Well, you can see Grayscale is here, but the dollar, this is what they're, you know, thinking of the dollar to become more depressed. It's to further depreciate. And they're not the only ones. There's a lot of, companies that's cozying up to Bitcoin now, because with all the spending and the way that people are hypothesizing how the government could possibly get us out of this situation, they're going to have to kill the dollar to do so. And so they're trying to encourage, you know, portfolio managers and stuff like that to diversify, because a lot of times portfolios have a cash position. But if you're holding on cash, right, if you've been holding on cash, right, look at this. You've been losing money. So you remember we talked about cash is trash. Ray Dalio, I'm talking about cash. I mean, cash is trash. They continue to print more. It's going to continue to depreciate. And so you need to have an alternative for that. And so normally they would go into bonds, but you remember bonds is at 0 interest rates. And when you factor in inflation, you're at negative. So you don't want to be there. So where else you got to go? You got to put on risk. Here's another risk asset that they're putting on. That's, you know, Bitcoin. It's because it's a play against the dollar. Excuse me. It's a play against the dollar. And we actually put on hedges for with the dollar against the market, with the hypothesis that the markets will be coming down and the dollar will come up. And so just taking a look at the dollar here, this is on the weekly chart. And we're still here. We're still chopping around here. But what we were looking at, let me just remove this for a second. What we're looking at is, okay, so the dollar came down to a floor zone, which is this candle right here. All right, so that being a floor, and we see, okay, price come off of here, price bouncing, you know, up higher, right? Had a buy trigger in here, so bought some cheap calls. Calls are really cheap. Okay. And it's chopping around. It's under the 9, but it's above the 20. Okay. So, we'll see how this plays out. Things get tricky when we see moves like this because there are a lot of people that's short the dollar right now. There's so many shorts on the dollar right now. The market has this weird way of doing the opposite of what everybody does, right? So if you follow the crowd for too long, you're eventually going to be wrong, basically. And so I think that this hedge here, although long term dollar is going to continue to fall, but I think that we can possibly get the dollar to come up to maybe the 50 or the 100. I think we can get it to possibly come up here before it further corrects, because so many people are down the dollar, short the dollar right now. And the markets has this weird way of just robbing everybody because they, that's how they do it. They get that premium out of them. So we'll see if that plays out. But, the long term is that the dollar is going to continue to get wrecked like we've seen here in the past with Biden coming in, the Democrat administration coming in, a lot of deficit spending. They're going to basically really depreciate the dollar. With more stimulus haven't even came in yet. So again, I'm looking short term that we can get a rise. When stimulus and stuff comes out, then I think we'll go back, further deterioration to the dollar. All right. So what else we got on the radar? Let's see. All right. We had the unemployment numbers again. $900,000 people filed for unemployment. So 900,000 people filing for unemployment. That's almost 1 million people. Those numbers are actually really bad. It does not look good for the economy. We had that many people out of work. The Great Reset, the Davos Agenda 2021. So I don't actually think this is a Great Reset meeting. I think that's going to be scheduled for the summer. But the Davos Agenda 2021 is this week coming up. So this week, starting tomorrow, all week, they're going to have this. It's going to be, aired, live. If you guys want to check it out, I have it in here. I'll put it on the calendar also, for you guys to be able to check it out. For those that don't know, events you can check out right here, or it's right here on the news feed. You can see what events are coming up. But yeah, so this Davos Agenda is the guy who has the Great Reset. In fact, I'm still reading his freaking book, The Great Reset, right? Klaus Schwab. I'll call him Santa Claus. But yeah, this guy looks like a German robot. It's just, weird. But anyway, these guys are, they have this meeting with all the world leaders. They talk about changing the world. They're using technology and finance and all this other stuff and government, powers. President Xi Jinping is supposed to be up here. Kristalina Georgieva, Christine Lagarde. Are we talking about the people that run the world, run the banks, run all of that? They're going to be at this thing. You may hear from them directly their plans on planning the economy. Their goal is to basically hijack the economy, to control the economy, to produce outcomes that they view are basically righteous and justice, and they think that they can do it now that we have a lot of technology, computers, people are on smartphones. Like Elon said, you're already a cyborg. You're an extension of your cell phone. And these companies are collecting all this data, how you use your cell phones, and, to try to get insights on how you're thinking. Basically with the, and in his book, again, they talk about, the COVID situation. It's helping them to usher in this whole new world order, if you will, at a very, very fast pace where people become more dependent on computers and technology and stuff like that. This is a part of their plan. And this is what he's been talking about for quite some time. I actually got his other book that he had dropped before that. This guy's all about this whole, shaping the future of the fourth industrial revolution, computers, technology, Anyway, this is not a movie. This is real life. And nobody's paying attention, right? And just like I said before, old school guy told me, hey, listen, if they was decide to take over the world, all they got to do is put it in the book and you will never know. And I was like, why? He said, because you don't read. So, I tell people all the time, if you really want to know this stuff, then you'll be studying. So every day is something on the website that you can study to further your education, to understanding of how this world works and how you fit into this equation. We all fit into this equation. But anyway, these guys here, they talking about planning the economy. And Austrian economics, we believe in free markets, freedom of the people to be able to determine outcomes, like the freedom of alternatives, the freedom of choice, But, this is really all interesting stuff. So just pay attention to this coming up this week. And let's see what else we got. Let me take that out. Okay. Warren Buffett, we got some insights from Warren Buffett for you guys. That's really, want to know how the big dogs is doing it. You got that. And then we got Greenlock Capital with David Einhorn. This is more information from the gurus and legends. I'm just uploading information for you guys to study. Again, the website is just like Facebook or anything else. You can just hit that like button right there, or you can actually comment, right here on the website. I'd love to hear what you guys have to say. Charlie Munger, more information from him. Greenlight Capital. This is more from David Einhorn. This guy here, he's calling for the markets to pretty much crash as well. Tom Sosnoff, okay, he sold Tasty Trade. Okay, so Tasty Trade is a pretty unique platform for options traders. Actually, probably like the best one, if you ask me. It's really nice for options traders. With strategies and all kind of stuff built into the platform. Really beautiful platform. For you guys that don't know Tom, he's the guy who actually built Thinkorswim. And so Thinkorswim is what we use at TD Ameritrade. So he sold this platform over to TD, and then he created this other one. I think it was Doe, and now he had Tasty Trade. And look, $1 billion right here. IG Group buying Tasty Trade. I think they plan on keeping things the same, how they do it over there. But, Tom getting him a big paycheck over there, right? So anyway, that's interesting news. U.S. existing home sales increase. Inventory tumbles to record low. All right, so you can see inventory tumbles to record low, meaning that there's not that many houses available for you to buy if you wanted to buy a house, okay? Because people are buying the houses up. And so the whole economics principle of scarcity, again, I had this debate with someone that was saying that there's no such thing as scarcity, that it's a mind, I don't even know what he was trying to get to, but it's some kind of mental, imagination that things are scarce. But, it's the basics of economics, scarcity itself. You've been trading, you know these principles. Just by trading in the markets. If you want to short stocks, they got to have inventory available. And because they don't have it available, that means that those shares are scarce because it's limited quantity, right? Even Bitcoin, Satoshis, when they created Bitcoin, they created a limited amount because they know that's how natural resources like gold and stuff like that work. But even if you were to take the argument that gold is infinite, I think Mark Cuban even has the same argument. Even if you say that gold is infinite, like in the earth, right? If you like dig in the earth, maybe it's infinite, but who knows? What's scarce is the time that the resource itself is available at the wants of the people, the timing of the wants of the people who want it. So right now, we have more people that want the resource than we actually have available. Okay, this is where you get prices from. Prices come from things being scarce. Air, we're breathing air. It's not scarce. So you don't pay for it, right? It doesn't really have any value, okay? Now, they do have some people that's selling cans of air now because they have dirty air in certain populations. There's one guy selling $20,000 can of air, right? Because he said his can of air is scarce, right? So anyway, it's one of those things where, a lot of people talk online and don't quite understand what they're even talking about. But it's the fact that even with gold, any kind of thing, whether, it's gold or whatever, you have to hire people to go and mine the gold from the earth. Even last year, we had a shortage on gold. You guys remember going around, couldn't find any gold anywhere, had to go straight to the mining companies themselves to even order some, right? And so shortage on that, so that's another indication of scarcity. So it doesn't mean that it's not unlimited under the earth. Who knows? But we just know the available quantity that's out and the amount of people that want it, is scarce. Same thing with houses. There's so many people that want houses, but how many houses are available at the time of these people's wants? The people that want, there are more people that want than available houses that are available. So therefore you have scarcity. You don't have abundance. So it's not an illusion. Anyway, I just had to get that out of the way. Goldman Sachs U.S. policy outlook. check this out. You want to see, what Goldman Sachs has to say. Again, we're talking more about Joe Biden, Congress, and stuff like that, what they think is going to happen. Nobody knows, but we can kind of see how it's shaping up. Janet Yellen's harsh words about China during her confirmation hearing. We talked about that earlier. Keynesians going all in. Again, this is another, branch of economics, where they think they could just spend their way out. Let me read this real quick. It says, mainstream economists are celebrating Joe Biden's election as U.S. president. For Keynesians, the outlook is for a reaffirmation of economic management by the state and of reflationary monetary policies to restore economic growth following the damage caused by COVID lockdowns. So John Maynard Keynes, he's a guy who, with these principles. And so you have presidents that, took on to his advice that the government could basically control the economy. And so when they say states, they're talking about the central government, the central planners, that they could plan economies. So there's different schools of economic thought, but John Maynard Keynes, this is what the Feds and all these other guys, this is what they're using. So anytime you hear this term, that's what they're talking about. Monetary, modern monetary theory, printing money, printing QE, quantitative easing, and all that stuff. That's what these guys are on. Get ready for inflation and higher interest rates. There's another cool article for you guys to check out. Here's a private equity could face a reckoning as power shifts in Congress. This article here is about Elizabeth Warren and, basically them coming after, private companies. They're talking about attacking dividends. They're talking about attacking share buybacks. When I say attacking, meaning they're talking about taxing, coming after that money. All right. And they're going to say that it is unjust. We have so many people that are broke and you guys out here making money. We need some of that money. Right. So that's what that's all about. And but yeah, I mean, you can check it out here. But that's the thing I was telling you about earlier is that Wall Street hasn't, to me, I haven't seen that they're pricing that in yet. Because if they were, then I don't think they would be so high. We had record highs here again last week. And remember, Trump gave those tax cuts. And at the time, before Trump gave the tax cuts, the companies were like hanging on to dear life. Like they were like at the end of their life. And Trump came and the market was like, woo. But that's why Trump was thinking in his mind that the market would crash if he was to lose. Well, obviously, we see that didn't happen. Right. And again, the markets are totally irrational because Biden's admin, they're, all the spending that they're doing. Well, there's no such thing as a free lunch. So that money has to come from somewhere. So that means they're going to have to tax to get the dollars up, to get the, the monies up so they can actually pay for some of the stuff. So taxes had to go up. And who are taxes going to go up on? Corporations, rich individuals. In fact, the stock market itself, and this thing, you guys can read it, I'm talking about taxing capital gains. And capital gains, I think this hasn't been over 30%, been under 30% since the 70s. And they're talking about going up to 40-some% for capital gains. So that means us guys, we trade, we in here, taxes going to go up on the money that we make. So you got to see how these things is going to affect your bottom line, and nobody's doing the calculation. And I think Anthony Scaramucci was saying the same thing when they basically turned their back on Trump because they thought that they can maintain the Senate with the Republicans. But all that ended up flipping on upside their head. So they the Republicans took a double L, and I don't think they're going to be able to recover from that. But the interesting thing is that these taxes go up. Corporations are really, really crazy about tax rates. You got to understand taxes. They talk a lot about it. Under Obama years, you can read any earnings reports, and they talked about it. Under Trump years, they talked about they was thanking Trump. They was bashing Trump in the media, but they were thanking him on the earnings reports. If you read, like I was telling you guys earlier, you'll see all these guys who don't want to be seen with Trump, didn't want to be seen with him in public because they didn't want to get the public bashing. They were praising him in their earnings reports. Thanks for this, tax cuts. We were able to save money for this, or deploy that money towards other productive means instead of having to give it to the government. So, but those companies, they're gonna have to pay. But what's interesting, I think, is that Ray Dalio, these guys here, because Ray Dalio, he be at these meetings and he's, an interesting guy, very smart, but he's more on the side of these guys. All right. They talk about reimagining capitalism and stuff like that. When they hear people talking about that, they're not talking about letting the free markets do what they do. They're talking about central planning, governments, people who have agendas to control the economy the way that they see fit. Whereas the natural markets, people actually choose winners and losers by where you spend. If Gucci doesn't sell Gucci products, Gucci will not be in business. Gucci cannot be such a exquisite brand, right? If people wanted to buy FUBU, then FUBU will win, right? So that's the kind of way it works. But when the government steps in and they say, hey, we're going to take a piece of FUBU, we're going to take a piece of Gucci, we're going to let, these are going to be the winners. Anybody else, they're going to have to lose. That's not how this thing's supposed to play out. Anyway, these guys have been talking about capitalism not working for the bottom. So we need to reimagine. We need to do some stuff, technology, and create, social justice and all this, stuff. But the markets, that's not the objective of the markets. The markets does not work that way. But they are thinking that they can actually make this happen, and it's just weird to me that that's what they're on. So in order for that to take place, you're talking about basically full-blown socialism. And I think they've been trying to get the head of these corporations to come into agreement with this whole thing. And I think that because even in the Trump years, they had a meeting with all these executives, and they had a meeting where they was talking about basically reimagining capitalism to try to create a more equitable world. And I think that was a part of the reason to get Biden in, get Trump ass up out of there. Or we need somebody that's going to be on board with all this stuff. And if the corporations could just, take some L's here so that we can try to spend money, in the free markets for the, or not in the free markets, but in the markets for the people. But as you guys can see with the stimulus spending, right? People were getting, $2,000. The $1.9, trillion that, Biden is, looking to spend, that's not going to the people. It's going to bureaucrats, right? And this is the problem that, corporations, free marketers have with it. It's not that we don't want them helping people. It's that when the government say that, they say it in name only. But really, Elizabeth Warren, who lives in a mansion, who's rich, Biden got like 6 houses. I mean, all these guys, they go into politics broke and they leave out rich. And so it's to elevate, those that's in political office. Even in Africa, my family's country in Liberia, right? My grandmother, she passed last year, so RIP grandma. But she was really upset about the president over there. And I have a lot of, have clients over there, over here that have to help family members out over there because the currency is just terrible. Inflation is out of this world. And the government had actually the IMF stopped lending them money because the misallocation of the money, what they were doing with the money was not to create jobs and production. It was to enrich government employees. So, my family was talking about, in Liberia, they're paying these government officials $10,000 a month to live. But meanwhile, people are starving. My granddad, he says people are sitting around not working, not productive at all, right? And a lot of times people think about wealth in dollars. But wealth, you have to think about in goods and services that your country produces. So you have unproductive people, you're not going to have a wealthy country. They said that they don't have the jobs, the infrastructure is just terrible. My grandfather has land over there. People stole his land. He has go through attorneys and stuff to try to get some kind of compensation for the property that he has over there. But anyway, it just reminds me of how the government's set up over there where they have all this power and they're getting loans and debt. And so when they're taking out all these debts, they're increasing the cost of living for everybody that's in the country. And the people can't even afford to live. I mean, they can't afford it. They don't have any work. So a lot of the people that's in America who's making the money, they send money back at home. They send in the US dollars, over there to give people, money to survive, because they're not working and stuff. And what is the government doing? Enriching themselves. The government officials are, they're living great. But the people are poor. And so even the IMF has stopped them from being able to take any more debt, no more money, right? Because you're ruining your country. Anyway, I'm seeing the same things that could possibly take place here in the U.S. With that same mentality that, government this, government that. But there's no such thing as a free lunch. You got to follow the paper trail. That's what we try to cover. So anyway, that's what that is. Hopefully you guys understand. If not, drop some comments in there and everything. The dollar has steadily depreciated during the 4 years of the Trump admin. Could President Biden reverse the tide? Here we go again. This is economist Komal. So you guys hit read more right here, and you can read his post right here from the site. Got earnings this week. What's popping up for earnings? Here we go. On Monday, before the bell, you got Kimberly Clark. Who else is interesting? Nothing really. So Monday is pretty much a light day. After the bell, you have X-Links. Z-Links, excuse me. And so Monday, that's just the main ones. But Tuesday, you get bigger names: Johnson & Johnson, GE, 3M, Verizon, DR Horton, American Express. That's before the bell opens. So Tuesday, before the markets open, we will know. We'll look at pre-market. I'll be in the game, show you guys what's happening. If they start effing up, we'll see it red. If they're doing good, it'll be green. After the close, however, you have AMD, tech stocks, Microsoft, tech stock. Is that Starbucks? Interesting. And let's see, Texas Instruments. That's another one. Capital One. All right. And then Wednesday, we have Boeing, AT&T, Abbott Laboratories, the NASDAQ, Anthem, Progressive, Corning. I used to work for Corning, actually. Used to make the glass that's in your phones and stuff. It's crazy. Corning, ADP, after the bell, Apple, Tesla, Facebook. Let's see who else. Levi, ServiceNow. Those are all good names there. Thursday, we got McDonald's, American Airlines, Visa, MasterCard, Skyworks, Southwest Airlines, Altria. It's got some home stocks in there. Tractor Supply, Beazer Homes. And then Friday, we have Caterpillar, Eli Lilly, Ericsson, Honeywell, SAP, Charter, L3. I think it's going to be a pretty good week. So we got, of course, Boeing should be interesting. Boeing is trading above its moving averages now. I think it's like a little in the between the 9 and the 20, but over the broader moving averages, which is interesting. But Apple, definitely will be paying attention to Apple, Tesla. Listen, Michael Burry, he's still short in there. I know he's getting his feelings hurt right now. He's losing a lot of money, but he did the same thing. If you watch the movie Big Short, but when it paid off. And again, we talked about Tesla earlier, so check that out. Facebook, we got some big boys in here. So Wednesday is going to be like the dynamite day, right? Because it's going to be after the close where you will get, the beginning of the markets, AMD, Microsoft, Starbucks, Texas Instruments. Those are going to be, moving the pre-market. And then after the close, we'll be paying attention to those. So, yeah. So with that being said, I know we're right here at time. So I'll take a look at a couple of names from you guys. Go ahead and drop them in the queue. We'll see what we can get through real quick. Give it about 5 minutes before we bring it to a close. FANG stocks have been performing pretty good. If you actually take a look at Apple, we're on a weekly chart right now. Let's take a look at the daily chart right here on Apple. And as you guys can see, up ahead of earnings here. Let me switch to yellow. You have a squeeze in here. You got the trend moving up, stochastics moving up, buy trigger right here, right? So it's a nice bounce up here, and you should come up to the, basically the one, the extensions, right? The green lines right there. So 142 first level, and then around 146, 147. So to me, Apple actually looks good ahead of earnings. So, see how that plays out. What else you guys got? You said HD. Yeah. Home Depot from last week. Yeah. We was talking about the home building stocks, the Home Depot, Lowe's. This is still in play, right? And let me just bring it up some so you guys can see it. There we go. So this stock is looking pretty good still. Squeeze is popping in there. Trend moving up. Stochastics moving up. Came down here, and now we're getting a bounce up. So still bullish on the home stocks. Ron said he has a flag on Beyond. That's another thing, a part of this whole great reset. This, you people stop eating cows. I don't eat red meat anymore. But I just think it's highly improbable for people to stop wanting to eat hamburgers. I have a hard enough time trying to stop the kids from eating hamburgers, right? I don't stop them, but I just give them the information. But they still order the hamburgers, right? And you got Beyond Meat. So this is their way of getting people to switch over, because it tastes good, actually. But, will people switch over? I think a lot of people like to have the real thing. But with this new economy, new world order, digital, everything digital, this is supposed to be the future. But it all depends on what people accept. If people don't accept it, it won't work. So this flag situation is interesting because it is, compressing up against, these key resistance levels. So I would like to see it break above this area here. So although it's a flag in here and it's got a buy trigger, it's still struggling right up here at this 100 moving average, as you can see. So the key thing is that we can get a pop above that, then we should be able to rally up into at least a 160 because the market like whole numbers, but I got this 165 target up there. All right. So that's the key thing that I would pay attention to that. It looks like it's trying to, though. I mean, you can see it, from that to there, then you get your flag in here, but I got to see it pop through that, those bands of resistance. What else you guys got? Terry with the CSTK. Says CSTK. I'm not able to pull it. What is that stock ticker? Oh, it's OSTK. Okay, there we go. OSTK, overstock. Okay, here's another one. All right, and yeah, so this one here just broke above its, key levels of resistance right here, right? So price is trading above that. That looks pretty good to me. And actually, let me move the annotation. All right, so what I'm going to do is let's just take this swing high to the swing low here to get some levels here. So I got basically a $75 target, first level target, and then about $83 for the next target. It is bullish, so I do like this. Okay, up to that zone right there, which if you take a look, this is pretty much the same level back here, right? And so, yeah, I like that one. I like when the stocks come down like this. You see what I'm saying? You already know what it's worth, what people are willing to spend for this thing. And then when you get that deflation, right, that sell off, then you're able to buy it at a cheaper price. You want to buy low, sell high. That's what Terrence is asking me. Why are people buying at the highs? Don't be the fool to buy at the highs. You want to buy when this thing comes to these floors, man. That just makes sense, right? Buy when it hit the floors, when it don't look so good. And then when you see it start to bounce up like this, that's your signal to get in, right? So I call them I like the high heel plays because they look like somebody's like high heel. Sometimes they look like this and then they come back down like this. And I call it the high heel play because, this is like a high heel shoe, right? Some red bottoms, and then you get that pop up. All right, RVP. My man, Dustin. See, Dustin, where you been at, Dustin? Dustin be having some setups, man. Dustin be having some stuff. Why you ain't been in the chat, Dustin? I like when Dust come in the chat, man. He be having the setups, man. He kind of quiet though, but he be having some setups too though. All right, Retractable Technologies. I'm gonna have to go back here for the bigger time frame. We can see how it lined up with that high right here at the 127, and then I'm gonna come in to this high, and let's just track it from this low here, and we can see how that worked also. It has a squeeze in here. If you can see, to pay attention to this indicator here, this one right here, these arrows are, they're pretty accurate actually. This right here say sell, the stock sells off, right? That's just the way that it normally works. But what I would like to see here, because we see it come tag that resistance is letting you know this is a ceiling. It got rejected, but it came back to the mean. So the question is, will it hold at the mean or will it come down some more? We should be able to see that this week, but that just means that you can get better pricing on this thing here. It isn't a squeeze. So this is a bullish setup, but if it was to come down some more, I wouldn't be mad at it. In fact, I'll pay more attention to it if it was to come down to the 50, which would be right around this zone right up in here. And at that bottom, catch it back up to try to test this zone again. So it's a cheap stock, it's only $12. But anyway, that's just how I feel about it. But we'll have to see. It's not right yet, but I think that it's working. Oh, you're good. You back at work? Oh, you back working, Dustin? Oh, okay. I know. You see, Dustin be having some plays. I gotta pay attention to Dustin. He be having some setups, man. He be on it. All right. Did y'all check out any of the other tech stocks like Microsoft? This is interesting also to me. Don't know how to really, what I really think about it, but I can just tell you this from what I saw, again, from this swing back here, we got this extension up here. And this extension has been able to hold true. Okay. And then running the retracements at the same level here, we got this zone right here as well. So both of these zones have worked. We've seen the price come boom, snap back, boom, snap back, boom, snap back. And this is where we are now. We're right back at that same spot that it normally gets that snap back at. Now, the question is, can we blow through this? We'll find out this week, actually. See, that 100 right here is still there. And this level here is actually tagging that. And we have a buy trigger that's in there. We have a squeeze that's in here, uptrend in here, but the faster stochastics is coming down. So there's a little divergence, but not much. But we have earnings coming up. So this is going to be an earnings situation with the earnings this week. And so based off of earnings, will we get a rejection or will we get a pop through? I'm bullish on Microsoft. Microsoft, unless again they got their new Xbox consoles. I don't know what else they got. In fact, they just partnered with the EV company. They're jumping into the EV game too. You see, but Microsoft, they're never going anywhere, right? Because they're like, Amazon, they got this cloud technology. Anything that you're doing electronics, you got to go through Microsoft or Amazon anyway. But I think they tag team with GM for some electric vehicle company. And this is going to be another competitor of Tesla. So that's what I was saying earlier about Master P, and all these other guys. I mean, everybody's jumping into the computer world. It just reminds me of the .com bubble. I think we may have an electric vehicle bubble. But yeah, so anyway, that's what I got here for this week. I know we're at time, guys. So we'll carry over on the website in the chat room. If you guys are new, check us out, wallstreetjackboyz.com. Registration is free. Tell a friend to tell a friend. Bring a friend. Website is free registration. Chat room is also free as well. So you guys can check this out right here. There's lots of things to do on the website. And I would like to hear from you guys. What do you like most about Wallstreet Jackboyz? Just hanging around. Do you feel like this is a community setting? Do you feel like you've learned anything since you've been here? Do you feel like this is a place that you can grow? Or do you feel like, I can't grow with Wallstreet Jackboyz? I'm not getting the information that I think is valuable. I would just like to hear from you guys about, what you value most from Wallstreet Jackboyz. So definitely let me know. Y'all can hit me up on the website. You can hit me in your inbox, direct messages, or, chat, or, wherever. I just want to hear from you guys, for real. So anyway, with that being said, we'll catch up in the markets this week. You guys enjoy the rest of your weekend. Have a good night.